Well, I think we should make a flying head start, hey? So, welcome there, webinar goers from the team at ABN. Today we're going to have a look at financial controls. So, strong financial controls have a lot of benefits with efficiency and cost savings and error reduction, as well as a chance of reducing fraud. Stronger financial controls are not just something that relate to big business. Small business also wins from having stronger financial controls. So today we're going to have a look at financial controls from a few different angles. So we're going to have a look at the practical strategies to tighten financial controls for clients of really any size. And then we're going to look at, from a bookkeeper's perspective, we're going to have a look at the positive outcomes that we can see from having clients that have stronger financial controls, and that's an interesting chat. And we're also going to have a look at errors and how strong controls reduce the time spent on fixing errors and in many cases prevent them from happening in the first place. And finally, we're going to have a look at setting up a tech stack or an app stack that handles the financial control discipline. So to help us with all of that, we have some special guests. That's special as in like really good and they know their stuff, as opposed to lick the bus window and special sort of. So we've got Cass Scott, Head of Bookkeeping. Cass is the Head of Bookkeeping APAC for ApprovalMax and Director and Senior Bookkeeper at Loris Bookkeeping, so she's one of us. With over 30 years of experience in providing bookkeeping, office admin and business support services across a whole lot of clients with various different industries under her wing. And Cass's expertise in financial controls makes her an ideal speaker for this webinar on today's topic. And next we have the wonderful Justin Campbell, product expert. Justin is your local product expert at ApprovalMax and has over a decade of accounting software and industry experience. So originally an accountant, he's also sort of one of us, but he's not quite a bookkeeper, he's an accountant. But he's there. And he's worked with Xero for over 10 years. So let's kick it all off. Cass, let's start with you. What does it mean to have financial controls in place?
Yeah, thanks, Pete, and thanks for having me along today. Look, for me, one of the key parameters around having financial controls in place is to assure the accuracy and completeness of our businesses and our clients' businesses' financial results. It's also about mitigating financial risk, and those risks can come internally or externally as well. It also means that it helps us comply with our compliance duties. It's the corporate governance around the business, the financial aspects of the business, and the due diligence around that as well. And they also help us meet our financial objectives. So whilst financial controls are the tool, the reason we have them in place is I think fundamentally to assure the accuracy and completeness of our financial results, that they're not distorted in any way due to various factors that can come into place without the correct financial controls in place.
Excellent. At ABN here, we love our poll. So, Cass, that leads us to our first poll. So, Susie, if you can fire up your poll, and we're going to ask a question just about your client's financial controls. So, thinking about your client's financial controls in general terms, so you'll have some across a spectrum. Where do you see they sit? Strong financial controls, they need improvement, or in general, do they have weak financial controls? It's not a trick question. Now, I don't have the ability to share these results, do I? Justin, do you?
No, I don't.
That's all right.
So you can throw them up.
Susie can, yep.
And Susie, going to slow us down. Susie, throw them up and we have a quick look. That would be ideal.
It's always the anticipation of waiting on a poll result to see whether it meets what your thoughts are about the industry as well. Here we go. Oh, I just saw it pop up there, and I think needs improvement was the one that was leading the race.
That was very quick. You had to digest it quickly. I don't know if you can do it. Here, what? Let's assume that. Oh no, here we go. Let's assume we have. Oh, there we go. How would you rate it? So, if we don't have that pop up shortly, what we'll do is we might even publish that and scoot it out with the copy of the webinar when we send it out in the coming couple of days. All right, so yeah, I think you got it spot on, Cass. I think in general terms, we in small business land think our clients need generally have some weaker financial controls and need some improvement. So Cass, you've got a wealth of experience helping businesses of varying sizes. What are the best ways to tighten financial controls in a business in your mind?
So when we talk about financial controls in a business, it doesn't matter whether it's the small mum and dad, one person solo operator, or your large corporations. There we go. Needs improvement. 73% need improvement, and only 17% say that they believe their clients' financial controls are strong. So not unexpected based on some of the surveys that have come back. But in terms of tightening financial controls, they don't have to be complex. You can actually start with the most simplest functions within a business. Things like setting up separation of duties. The person that's paying the bills isn't necessarily entering the bills in. Setting up a delegation of authority structure. So who in the business is authorised to incur expenditure or to approve expenditure. Simple things like screening and verifying and approving the suppliers and vendors that you use. And as bookkeepers, many of us are really, really hyper-focused already on things like suppliers having valid ABN numbers. But putting a protocol in place to actually formalise that is a really, really great way to start to tighten those financial controls. Having mechanisms in place where you can detect things like duplicate bills or duplicate purchase order numbers. Simple things like matching your bills to your purchase orders. So, you know, we've received an invoice from our supplier for that. Yes, we've checked and confirmed that the goods that we've received have actually matched what we've been invoiced for. But the other side of that is, well, did we actually authorise and order that in the first place? Or have we been supplied in excess of what we were after? Is it at a higher price? And all of those things that often come out from a matching bills to PO type scenario. As we said, checking if goods and services have been received before making payments. That's always a good one, particularly with some suppliers that they themselves may have poor quality control processes. So the invoice goes out and their accounts department starts chasing it, and yet the goods are still languishing in a dock somewhere ready to be shipped. Other things like once you've got your financial records in play, but talking about detecting any changes after things have been approved. And a number of the accounting software have tools and functions within them that allows that to happen. And also having the audit trail and audit reports around the work that's been undertaken stored in one place or stored centrally, somewhere that it's easy to access and review if, for whatever reason, you've got any questions about the integrity of the financial activity that's occurred within the business.
Yeah, so look, just staying with the issue of tightening financial controls for a moment, we know there's a lot of benefit in automating some of those things that you were talking about, Cass. And question for Justin, how does ApprovalMax work to tighten some of those financial controls?
Yeah, so ApprovalMax really makes doing all these things sort of automated and really just part of your process and part of the approval workflow that you do. Whereas if you were just using sort of Xero or QuickBooks Online or MyOb, you'd really have to be consciously doing these things manually all the time and have some kind of other system for tracking them. So if we could just get the next slide, please, I'll talk about first setting up
Just
yeah.
while you're there, remind people, if you've got questions along the way, if you wouldn't mind, just tap them into Q&A. We've got the wonderful Susie behind the scenes, so she might be able to troubleshoot some of those things. You might have questions on what you're seeing with what Justin's showing us. So yeah, use the Q&A or the chat features and someone will get to you. Sorry, mate.
Yeah, no problem at all. So the first thing you sort of do in ApprovalMax is you set up your approval workflows for your bills and your purchase orders, your credit notes, whatever you want to set up. So when you're doing that, what you're really doing is you're thinking about what's your delegated authority structure. And so what steps of approvals do you want to go through? What rules do you want to put in place of setting it when should a bill go to this person or that person? How do you want it all to work? And one thing we do in ApprovalMax is make it really visual for you to kind of lay that out and see it. But you may also benefit from sort of writing this down on on a piece of paper or whiteboard when you're initially thinking about it as well, if that helps you. And then the other really key concept is you want to have your separation of duty. So you really want to make sure that the person entering a bill isn't also the person approving it. And so that's really easy to do in ApprovalMax. Whereas say you're using Xero, if you've got the ability to approve a bill, that really gives you the ability to approve and pay any bill in that system, and it also gives you visibility over every single bill in the file. Whereas in ApprovalMax, an approver can only see by default, unless they're an administrator, they can only see the things that they're actually they're actually approving, that they're the approver for or they're the requester for. So that visibility is also another really important thing. So I might move on and talk about vendor approval. So I'll go to next slide, please. So one of the things you can do in ApprovalMax is when you're giving people the ability to add bills, you can choose whether or not they're allowed to add new contacts. So in general, what I advise is people don't give that ability. And instead, if a new contact needs to be added, they first need to put in a contact approval form, or if it's QuickBooks Online, it's called a vendor approval. And so you could put in all the contact details, including the BSB and account number and all of those, ABN, of course. All of those details can be entered into ApprovalMax. That can be sent to another person for approval. So then you've got at least a 2-step approval process, but you can have as many steps as you want. So you've got a way of verifying that. And as part of that process, the person approving it may also go on the ABR register and look up the ABN, make sure the ABN's valid, and check some of those details as well. So yeah, that's a really powerful thing. And whenever I'm demoing ApprovalMax, I always try to push this, because everyone comes to us for bill approvals. That's the thing that's the problem they always want to solve. But I'm always like, yeah, you should be actually looking at solving this problem as well. Great. So I'll just go to the next slide, please. And we'll talk about duplicate detection. So ApprovalMax has duplicate detection, and this will sort of work with the duplicate detection you already have in Xero itself, or in if you're a Dext user, using Dext or HubDoc. So, but we will flag something as a potential duplicate, and because I'm always demoing and using the same examples, mine get flagged all the time because I'm not creative enough to think of new examples every demo. All right, so we'll go to the next slide. So build a purchase order matching. This is a really big one, especially in Xero, because QuickBooks Online has native build a purchase order matching in the product, but Xero doesn't. And so as part of your approval process, when you're approving a bill, you can then be matching it to the relevant purchase order, and then you can build reports based on to find any purchase orders that haven't yet been fully matched to a bill. So this is a really important control. And the other thing you can do is introduce a threshold, say over a certain amount, or that you actually require a purchase order in the system before a bill can be approved. So in a way, purchase orders can also work as like a purchase request for large items. But in saying that, we have some customers who actually require purchase orders for every single bill in their system. So some organizations take it to quite a rigorous level. All right, so let's go to the next slide and talk about goods received notes. This actually ties a lot in with purchase orders as well. So you can turn on a feature called goods received notes. And if you're using an inventory solution like, Deer Inventory or Unleashed or whatnot, those products also have goods received notes built into them. But when you're dealing with physical stock, what you probably want to do is be having a system of recording. Has the stock has it arrived? Is it in good condition? And then a way of documenting that and recording it. And by adding goods received notes, which we did last year to ApprovalMax, we've now given it. You don't have to manage this in some other system. So that means that when it comes time to paying the bill and people are doing the matching the purchase orders, they can go and check the goods received note to make sure that they should actually be paying that bill before going any further. All right, so we'll go to the next slide. Okay, so we have in ApprovalMax, we have two types of fraud detection built into the product. One is we can detect if someone is bypassing ApprovalMax. So say they're going in a Xero or QuickBooks and they're putting in a bill and just approving it and it never goes through ApprovalMax. We'll pull that into ApprovalMax and we'll flag it as maybe you should look at this bill because it bypassed the normal approval process in ApprovalMax. The second thing that we do is we also track it after it's been approved. So if someone goes in and makes changes to an approved bill, we can flag that as well. And you've got the option, do you want the administrator notified if that happens? But what'll happen is you'll get in ApprovalMax, you'll get an exclamation mark and it'll get a little note on it flagging it. So it could be perfectly legitimate. So in that case, what you might do is go down to the comments area and just type in, we had to change the account because of this reason or that reason. And at least you've got then a documentation of why things were changed. All right, so and then the final point is, so we'll go to the next slide, is audit reports and audit logs. So everything we approve in ApprovalMax, we create an audit report for it that details who the requester is, who the requester was, I should say, what data was requested, who the approvers were, what steps it went through, all the relevant information with a link to the source document and everything. And we attach that to the approval, both in ApprovalMax and also in Xero and QuickBooks and NetSuite. So we attach it in the accounting software as well. In addition to that, down the bottom of the request, we also have the approval log. So any of your internal communication, and you can mention people, and so I can say, hey Susie, what was this purchase for? And I can tag people and all of that, and we can all chat about it in all of that conversation around and context around it, why something got approved or got rejected, gets captured in ApprovalMax. And that's really important. So you've got any clients who, especially if they're audited, this is why we have so many non-for-profits on ApprovalMax, then capturing all that information in some place and not having it in somebody's inbox is super important. So that's me done. So I'll hand back to you, Peter.
Drawing on my audit background, and by the way, it wasn't PwC, but drawing on my audit background there, there's a lot that can be achieved to improve controls around the division of duties and all the rest of it. And it's good to see how the ApprovalMax process is. Yes, you can go as far and as short as you can, just depending on the size of your team. So I guess that scalability of process is important. I also like the visual on your lines of approval. So it always used to, going around an audit team, and you say, oh well, who do I see for this, and who do I see for that, and who approves this, and you got a name and you got a picture, so it makes it a good process. So if someone steps into a role new, the process is really clear who does what, where, and who they approve to. So I a lot to like about it. We're going to move on a little bit, and clients that do have those good financial controls, I think we look into our client portfolios and we say they tend to be the ones that you work really well with. They're the ones, you might call them your A-class clients, and we can all use more A-class clients, I'm sure. Cass, can you talk to us about what impact controls have on your client quality, retention rates, and and ultimately, I guess it even reflects down onto the practice value. The more A-class clients you've got, you tend to find that they are good clients, they pay well, and they add to the value of your practice. So can you just sort of just work through that?
Yeah. So, one of the things I think as bookkeepers we look at is how do we continue to service and support our clients in the most effective way. And you're right, Pete, if our clients' businesses succeed and succeed well, then they will often stick around for a lot longer. They value the services that we provide them. And as bookkeeping practices, I think we're actually really uniquely positioned to support clients down this pathway with financial controls. So what does it do for us as a practice in the first instance? I think it increases the value of our service. We are then seen as a really, really trusted advisor with our clients. Our clients know that we are looking out for them with the best intentions at heart. We know, or our clients know, that we're looking at mitigating any risks that they may be exposed to. So by having us in the background monitoring these at a practice level across our client base, it does definitely increase the value of the services. And if we can increase the value of our services, we can charge more, which is always a really, really good thing to do. The thing is too, learning about conversations around financial control. So not just putting in systems and processes, but having those deeper conversations with your clients as well. They may not be aware of what the exposure to them is. I think sometimes we live in a bit of a bubble. So, as a bookkeeper, we're in social media forums, we get great stuff out of ABN, we get stuff out of ApprovalMax and other vendors talking about the risks of fraud and scams and those sorts of things that are going around. But I think some days we've got to recognize that our clients may not sit in those same bubbles. So we are the conduit of information to them around what the risks are out there, how they're exposed, and then how they can actually look at mitigating those risks. Again, it's coming back to increasing the value of the services that we provide. Again, looking at our role as a gatekeeper of our client's business. I think most of us that are in practice are pretty passionate about the work that we do and passionate about our client's business, sometimes to the extreme. But we step into this role with the requirements of the tax practitioners board around us, with things around integrity, and we can deliver that as part of the service that we deliver when we're working with our clients. So we can actually be a bit of a gatekeeper to a client's business in that, again, we've got visibility about what's out there in industry to support them, what tools and software, things like ApprovalMax, what are the risks that are emerging out there. So we might be well ahead of the ball rather than other businesses knowing what is actually coming and what the exposure risks are. So we've become a bit of a gatekeeper around financial process. As Pete articulated, the quality of the clients, those clients that see the value in having tighter financial controls, from my perspective, are focused about the success of their business. If they're a little bit laissez-faire about it, yeah, don't worry, it doesn't matter, I'll deal with that. What does that mean when they are impacted, and how does that then run back and impact our business and the relationship we have with the clients and the support that we've been trying to provide? I've certainly seen a couple of businesses where we've tried to approach them around financial controls, and it's like, yeah, that's okay, we'll be right. And when something actually does occur, it's actually really simple for them to come back and try and blame us for it rather than themselves. So I think it diminishes the value of them as a client to us as a practice. I'd certainly rather work with somebody that is valuing the integrity of their business, because that means they're valuing the integrity of mine. Strong and trusted partner, I think that's sort of self-evident with what we've been talking about there. And, if there aren't financial controls in place, and I know, I just mentioned clients that if you tell them and they ignore it, they'll come back and still blame you. But if you don't tell them and they're exposed to some sort of financial risk or financial breach, are they then going to come back and blame you as well? So I think having the tough conversations with clients, and sometimes they are really, really tough conversations, because most people, I think, are inherently trustworthy of the people that they work with, either within their businesses. And, if we look at fraud, most of it comes from people that we know, whether it's staff, whether it's suppliers, whether it's, business partners. All of that can be mitigated by having those hard conversations and bringing financial controls into our clients' businesses. And I think, the last one there, the risk of losing a client is far greater if we don't step in and start to have those conversations as well. Because I can guarantee you, if you're not having that conversation with your client, then potentially somebody else is. And I'd prefer not to lose a client because I failed to have that conversation with them.
Yeah, good points all. Yeah, I 100% agree with that. I mean, it's not always an easy conversation to start, but once you do, you start to uncover those clients that actually genuinely take an interest in their own business, and they're your keys to your A-class clients. If you can find those ones that do have an interest in their business and perhaps aren't using the full value of what you do, they become your A-class clients. So you've got, they're receptive to more services, and they're looking for more value. They're often happy to pay more to get more. So they're the clients you're looking to unearth out of this thing. And if, the story, it's a pretty good one. It's, I can deliver you some efficiency. I can help you cut your error rate. And, as you say, there's some fraud risk in there. But even just the controls around, like even just as a prevention, audit prevention from the tax office, they look hard at systems. They start to think, how does this system work? How is it likely to get the right result? If you've got a system, a process there that's got good internal controls, you're running a bit of a negative tax office audit strategy. And even if you do cop one, you'll find you'll answer them and deal with them a lot more quickly and a lot more efficiently. Just want to talk for us for the moment, Cass. Tell us a bit more about how good financial controls reduce the time spent on fixing bookkeeping errors.
So Pete, I think probably there's the really good analogy that we often hear about, bookkeepers being the nurses of our clients. We're not the doctors, we're the nurses. So we're really deeply involved in the clients on a day-to-day basis. And then there's the extension to that it's cheaper to prevent than it is to cure in some instances. So, how can they reduce time spent on fixing bookkeeping errors? Well, if you can prevent it happening in the first place, then it's obviously going to be a more cost-effective way of working with your clients. We look at things like doing it once and doing it right. Why rebuild something? Why have to fix it if you can do it correctly in the first place? And I sometimes use the analogy of an upside down triangle, that sometimes you need to just do a little bit more work up front so that you have those streamlined processes and efficiencies and controls in place. But it means that eventually, as you keep working through, you are only doing it the once and you are doing it right. Right people in the right place. And, as we've talked about and Justin showed with the approvals matrices, we've got separation of duties, things like rotating staff. And this is an interesting one when you've got clients and you might be chatting to them about their internal bookkeeper or payroll person. And, you look at the records and you might say, gee, so-and-so's got an excessive amount of leave. Are they not taking leave? And the response can often be, oh no, they don't think the place can work without them. rotating staff through and actually making staff take leave is actually a really effective financial control in itself, because it's going to give the opportunity for a second set of eyes to be running over whatever those systems and processes are. And ironically, one of the things that's been identified for a number of businesses where fraud has been committed is that the person that's committing it is not moving out of that role. So they don't take leave. They hold it very, very closely to themselves. So I think sometimes being focused on that and rotating staff through a position is a really great way of mitigating risk as well. Documenting processes and standardization. Now, look, we're all bookkeepers. We work with our clients. We deliver services to our clients, and we have a standard way of delivering those services. Our clients should have that as well within their businesses. And we can assist really, really strongly in defining what those processes are. And I think the other advantage with bookkeepers is because we're working across a wide range of clients, we see a number of different ways of delivering the same thing fundamentally. And we can understand what the best practice is and become a really, really good advocate for our clients in refining process. So taking out of the inefficiencies in a process, but building in the controls that need to be in there at the same time. Continuous education, I think that's a no-brainer. And we're, as bookkeeping practices and BAS agents, we're in the cycle of continuous education. And again, I think that's important for us to share with our clients, having those conversations and keeping them updated about what's changing, where the risks are, what are the emerging risks that are coming out. And, looking at your tech solutions. And I think this is an interesting one as well. And, products come out and products evolve. And one of the things I think doesn't happen sometimes with bookkeepers, with anybody using systems, is you get a bit complacent. This is the way I've always done it. Oh, there's something new that's come in. Yeah, that's a bit of a not really interested. I'll just keep doing it the same way. And I think historically, bookkeepers have actually been good at finding hacks in software. And I know I've been like that. So something's not worked the way we expect it to. So we've hacked our way around it to get the outcome. But then something might be fixed, but we're also stuck in our ways and we go, oh, we're not going to change. So I think challenging our thinking through, the combination of the continuous education and understanding your tech solutions is actually a really, really important part of financial controls and reducing time spent. So looking at our own actions and work with our clients, and have we become complacent? Is there something else that we can do? How do we challenge our own thinking around it, but also how do we challenge our clients' thinking as well?
All good points. Justin, I know you're bursting at the seams here to join the conversation. What would you like to add?
Oh well, I had a few thoughts back there. The main one was the importance of having those conversations. So I actually remembered a funny story that I once went in the start of my accounting career. I just got in this job in an accounting firm, and around the same time, I met a girl and started dating a girl, and I met her parents. And when I told them where I worked, they were like, oh really? Because um they had actually accumulated quite a big Div 7A debt, and they felt that they had not been properly like warned about this by their accountant. So that created quite a quite an awkward situation, situation there that thankfully they didn't hold it against me, but it just goes to show like how important having those conversations about the work we do with clients is just so important, because they don't understand bookkeeping and taxes and accounting, and it's on us to explain it.
Yeah, good points. I want to talk about fraud. Seen a little bit in my time. Wasn't a perpetrator of it. Just witnessed it as enacting for clients, and it never ceases to amaze me that how prevalent it is, and how long they can get away with it. And it's and as Cass touched on a few things, there are some hints there, like not wanting to take leave. They're covering their own tracks, and some trappings of wealth like flash cars and all sorts of stuff. And often they're in a situation where they're juggling the owner and the creditors and feeding a story, all of which must come crashing down at some stage. But the longer it goes on, the more entrenched the problem becomes for the owner. And in many cases, it can be absolutely fatal. So fraud is a big deal. So I think it's time for another magic poll, Susie. So if we can just, I'm going to share some, so maybe we can all share some exposure that we've had to fraud. And maybe, Susie, if you can fire this one up. And we're just going to touch on the sorts of frauds that you may have been exposed to over, through your client base. I'm not saying that you've perpetrated them, I'm saying you may have witnessed them. But things like duplicate invoices, billing schemes, and employee fraud reimbursements, just dodgy expenses, theft of accounts payable data, intercepting payments, redirecting payments, impersonations, that sort of stuff. So maybe just give it a crack and see if you come across any of those. Probably the corollary for the number 5, they were talking about checks, which are just about redundant, aren't they? Now, Cass, I'd say the modern day equivalent of that would be impersonation, wouldn't it? So if you've had clients that have been subject to impersonation scams, drop those into number 5.
There's just a message that's come through the chat that it looks like they're having an issue launching the poll. So unfortunately, we're not going to get a poll result on this one, Pete. Oh, just popped up very quickly. No, popped up,
Great.
Gone again. Got it. Can we see the poll now, hopefully? But I think probably one of the interesting things, Pete, is there seems to be a sense that fraud is something that is new. It's not. Fraud's been around for as long as people have been around. And it's just changed. The method that it's now undertaken is different. So that poll should be up now, if you can respond to that.
Well, some of the original convicts on the first fleet were fraudsters.
Well, that's how they got here. So
yeah, forgers.
Yeah. It's just that the tools around are different, and people adapt to what's out there, and look at where they can exploit any opportunities.
Yeah. Often they're very simple too, aren't they? You look at them and go, that wasn't that hard, but there's a system has let them down. A system has allowed them to flourish. So, with a couple of basic checks in place, you'd say, well, that would have been easily prevented. And often it goes on. Where it's allowed to flourish is the person's been able to gain confidence of an owner to.
I was reading an interesting article the other day about a woman who'd committed fraud, and I think she's just going through the courts at the moment. And it was uncovered, and she turned around and actually blamed the business owner for not having the financial controls in place. So she actually accepted no responsibility herself. And her response was, well, if you'd been tougher with your financial controls, this wouldn't have happened. So I thought that was an interesting outcome.
Oh, that's so bad. I read an example of a magazine in Queensland where it had gone on for years, and in the end, they ended up having to let go like most of the staff at that company and all of that because when they finally discovered the fraud, they found out that they hadn't paid suppliers in forever. They had all these unpaid tax debts because they put all this trust into a single person. And this is what you're talking about with job rotation and vacation leave. It's hugely important.
Often, I've had a few, I sound like I'm heavily involved in fraud, but I've had a few where I've seen that it's the tax office payments that are the where the offence is committed. So if I'm going to defraud, better off not defrauding the people that are going to turn up with materials on the job the next day, because that'll get caught a lot sooner. But if you've telling the owner that the tax has been paid. There's not much, and it's probably going to sound a bit awful, but the tax office haven't been that good at collecting their debts, and they've allowed them to roll out. So they can be, it's only one creditor, and it can be for a large amount, and it can be juggled for a long time, or historically it could be. Whereas a trade supplier that's going to turn up with the materials on site the next day isn't going to put up with it for 1 month, 1 year. And I saw a couple with over 12 months with tax office debt being juggled, and we're paying part of it off, and the tax office believe one thing, the owner thinks he's up to date. The tax office debt and an internal person are often, they're a source of fraud, and it can be big stuff, like it can be big amount. Interesting poll results there, Cass. Duplicate invoices, that's a pretty common one these days. Billing scams, reimbursement fraud. Yep, there's often seen chunks of that, and just the redirection of bank payments is another. So, all interesting stuff. The one of the more common areas that we're seeing is accounts payable fraud. Cass, can you share with our listeners the sorts of things to watch out for just with accounts payable fraud? It's probably one of the most where we see it. It's the easiest.
I think it is, Pete, and it is easier well, is it easily identifiable? I think if you've got the knowledge around where the business is exposed, it should be easily identifiable. And if you've got your financial controls and processes in place, it should be easily identifiable. It's where those controls are lacking that businesses become more exposed. So I really, on the list here, I really like the concept of looking at unusual suppliers and suppliers using free email providers. And, one of the things I look at with accounts payables fraud is you hear about the suppliers that are using a Bunnings ABN number, and it's, Joe Bog, the plumber man from up the road, is sending the invoice in. Now, whilst that's not necessarily fraud in the sense that they are taking additional money from the business, but the actions of that supplier in using a fraudulent ABN are putting the business in a risk where they're going to be financially impacted. So if they're audited by the ATO, they'll lose the deductibility of the expense. There's the questions around the GST credit side of things. So, unusual suppliers are suppliers using free email providers. And I know Gmail is not uncommon and Outlook's not uncommon, but at least it's a starting point. And particularly if you think it's an organization that's been around for a long time, sometimes it's worth just diving a little bit further into that. Excessive payments to a single supplier is also a good one. And, what that might be an indicator of is some sort of collusion between somebody within the business and an external supplier. So, is it normal, or do you have an expectation that you would be making such large payments to a single supplier? And there was one that actually popped up on my radar yesterday, and to be honest, I can't even think what it was now, but it was basically an individual was colluding with the supplier of services, making sure all of the contracts were being directed to this particular supplier of services, and then was getting a kickback out of this supplier of services as well. So these sorts of things really start to put red flags out there that something may be astray. Incomplete or copied documentation, and I think we've seen that, something that doesn't have banking details on it, the dollar values aren't missing, so it's a really unprofessional document. I actually get a bit skeptical if I get invoices emailed to me that are in Word format or a JPEG format rather than a PDF. So, looking for document anomalies, particularly if there's a history from a particular supplier of having good quality documentation. So has somebody tried to leverage off of the reputation of a supplier? And again, I think we see often things like the ABR and the IP registrations that come through. Payments just below the approval limit. Now, that's an interesting one. And one of the best pieces of advice I actually got from somebody in terms of committing fraud was don't do it in round numbers. Do it in dollars and cents, because it's actually a little bit less likely to be detected, funnily enough. Not a map for committing fraud out there, just putting that there. But, you know, if you've got a business that the supplier knows you've perhaps got a threshold, and government's a really interesting department, they'll often have credit cards for payments under a certain dollar value. And if a business knows what that credit card number is, and they're just paying under that approval limit, it could well go through the business without any checks and balances. And again, you know, we look at abnormally low or high supplier prices. So, you know, is it a supplier fraud? Is it perhaps a collusion type fraud? Is it, you know, somebody within the business is, and, you know, I've seen sort of similar variations. The invoice is cut in the business for, you know, one widget at $100. And yet when the invoice goes out the door, it's one widget at $200, and the business, the client pays the $200. The invoice is then amended back down to $100. $100 is offset against the invoice, and that other $100 is pocketed by whoever it is that's committing the fraud. And often in those situations, what you might see is another bank account in play. So the 200 is paid to the fraudster's bank account, and then they remit the 100 back, amend the invoice, and for all intents and purposes, nothing has been detected. So this is where tools like ApprovalMax are really, really valuable, particularly for POs, PO matching, goods receipting, you know, duplication, and those supplier and vendor checks.
All good. Yeah, so there's plenty. Accounts payable are an area where we could have an issue. So we need to move on to tech stacks and the sorts of elements, you know, app stacks, tech stacks, whatever you want to call them, and the sort of elements you might want to position in it to help prevent and detect and correct any financial issues. Cass?
Yeah, look, short and simple, and I think we've touched on a lot of this moving through, is have the approvals process in place. It prevents errors, and particularly if you've got less skilled staff as well. You know, who has access to your tech solutions? Are they the right people accessing at the right time at the right levels? What are the validations that you're doing around the different things within those systems? Are you checking the audit trails? All of those sorts of things. And it really is about, you know, making sure you're using your tech solutions the way they're designed to be used. And I know I mentioned earlier about bookkeepers finding good hacks. Hacking around security is not one of those, and sharing logins, for instance, is a really simple thing that can be mitigated and fixed. So, you know, use the system well, monitor who's getting in, have the approvals processes in place, and have a review strategy around it as well.
Spot on. Your top tips for building the right app stack?
Automation, where you can automate it, definitely do it. It frees up the business owner and also the practice to a certain extent to actually focus on higher value, which might be implementing better financial controls around the business. Curate your tech stack to include systems that bring value. So it could be that you need to pay a little bit more for one system that does what 3 systems do, but intrinsically provides better value to the service that you're providing to your clients or within your clients' businesses. So I think a lot of people go, if it's cheap or free, it's good. That's not necessarily the case. So I think I'd be a little bit more strategic about curating your tech stack. Apps that keep your financial data safe. Again, anything that's free, I'd be really concerned about why it's free and is your financial data safe. Security, again, all of the reputable tech providers should have really, really clear and concise security information about how their data is protected, where it's stored, all of those sorts of things. And apps that evolve with your business needs. So this is always an interesting one with clients. You'll often look at their business and right here, right now, they may not need something quite as sophisticated, but based on your experience within that industry, you'll know that if they're going to succeed, then there's an app that might be better suited that they'll grow into and evolve as that business needs. So I think there's some really, really interesting things to think about when you're talking about tech from a financial control perspective.
Everyone likes to take away something from a webinar, like a checklist or a to-do list, and from a financial controls perspective, Cass, can you take us through some of the steps that a bookkeeper could implement in the next 90 days to improve client outcomes? And that, you know, from that perspective, what we're looking for is something that might help lift those good clients and help them become those A-list clients that you're really looking for.
Well, think the first thing is, for the people sitting on the webinar, this is actually a really great first step, because what you're doing is continuing to educate yourselves around financial controls. Tangibly, I would say start to do an audit on both your own internal systems and also your clients' systems. And it doesn't have to be complex. It can just be a simple review of perhaps even the user access to a system. Identify where those strengths and weaknesses are, and then start to have those conversations with your clients around how they can perhaps mitigate their risk there. And a really, really simple one is definitely users in accounting systems and shared login credentials. And most of us can step into that pretty simply. Understand where the risks and dangers are. Obviously, continuous education, being aware of what's happening out there, tapping into industry specialists like ABN, like ApprovalMax, who know this stuff. This is their bread and butter. So they've got the idea, and they're communicating regularly where the risks and dangers are. A lot of businesses don't have clear policies for expense reimbursements. So just setting up that policy, I was chatting to a business yesterday who's implemented Wheel for their directors, but they're not implementing it for their other staff within their business. And their reason behind that is they wanted more clarity around the expense reimbursement process, and had designed a really clear policy around that. So they understood where their risks were in their business, and they put the systems and processes in place to address that. And I think that's another really simple thing that bookkeeping practices can actually help clients with. And the simple question is, hey, I can see you're doing a lot of reimbursements. What is your policy around that? Is it just send it in and it's reimbursed, or are there checks and balances? Does it need to be costed against a job? Is there a third level of approver? All of those sorts of things. Set up a process for reporting fraud. Do the people in the business have the access to the business owner, or are they being stymied by somebody else within the business? So does the business owner make themselves available? That's always a challenging one at times, particularly if you're in larger organizations where there's a more hierarchical structure, and the person that might be sitting at the desk doing, the day-to-day work is being protected from the business owner, or the business owner is being protected for them. So, how does a business go about reporting fraud? And is it an internal report, or is it an external report? Because there might be other stakeholders involved that are actually the better people to be reporting this to. Segregation of payment duties and authorities. We've gone over that. And again, having that conversation with business owners. As bookkeepers, it's very easy for a business owner, I think, to abrogate responsibility over to us and say, oh, well, you do the pay, you enter the bills and you process the bank payments, and here's my login to my bank account, and you can just process those. So it's putting in a process that actually separates that all out and protects the business owner, and, to be honest, protects your bum as a bookkeeper too. Verifying suppliers and vendors. I think that's a no-brainer. And whether you're stepping into tools like ApprovalMax that can automate that process and really standardize and simplify that, if you're not using it, even a simple phone call to validate, make sure the information's correct, is really great to have in businesses. And again, these are things that we as bookkeeping practices can bring into our service offering to our clients, which increases the value of the services that we offer. And again, the automation of the AP process, security and segregation of duty. There's really common themes here about education, about separation, about process. And I think if we can start to review those, they're really simple things that will trigger those tough conversations with clients, and set you up as a valued advisor to the businesses, completely and continuously enhance your worth and value in the business owner's eyes, and create successful businesses both for ourselves and our clients.
That's excellent. We're running a little bit close to time, but just a reminder for everyone that you will receive a copy of the video, a recording of the episode in the next couple of days, and Cass's 90-day to-do list. That last slide there. I think I've twisted Susie's arm, and she may well send you a PDF of that if you want to stick that on the fridge or on the office wall, and have a look at some of those items that you could implement. So look, I just want to say, look, actually, if we got some time for a couple of minutes for questions, there hasn't been a lot to go through, but if anyone's got any, probably put them in chat. We got the three of us here. We might be able to grab, and if not, give it a moment or two. But I'll say a big thanks to Cass and Justin. That was excellent, guys.
Mm,
We'll just give it a couple more moments, and then we'll say goodbye. Any
yeah,
final,
I think that,
Cass?
yeah, I think, Pete, for me, the whole concept of financial controls should be part of the DNA of both the bookkeeping practice and our clients' businesses. I was probably pretty lucky as I started working. That was the first thing that was in sort of given to me in terms of knowledge with all the businesses that I worked with was the importance of financial controls. And I was bookkeeping before I even knew I was actually bookkeeping, straight out of school. So I think, starting to bring this in as the DNA of your business, making it a conversation that you have with your staff and your team. If you've got a team and you're doing a training session, do a training session on financial controls, because you as the practice owner may not be the person that's best positioned to identify the weaknesses or the strengths of your clients' businesses. Your team themselves could be. So I would, continuous education and involve other people and make it part of the DNA of what you do.
The lunatic running the show here, which was me, told people to put questions in the chat. It's can you put them into Q&A, please?
Mm.
um, the Justin, you got any final thoughts?
Yeah, kind of related to what Cass just said, that the way I like to think about it, like we often use the term automation, but it's less about like doing things as rapidly as possible and more about um, automating your environment and your workflows in a way that you guarantee that things will just happen, that you're not relying on remembering, oh, I should have to check, I should check this, I should do that. That you need to build systems, kind of like if you've ever read Atomic Habits, like environment design, like you really need to build things so that things just become habitual and they happen. And that's why I think doing things in inboxes, in email, and spreadsheets and other things, they don't work because they're too dependent on you remembering to do things, and you really need to try to um, automate following good financial controls.
Yeah. Look, from my point of view, as I said, I came from an audit background many, many years ago. I see the negative impacts of not having them as an auditor, but I also see the positives, like the positive impacts of having good financial controls are amazingly good. Like, there's just efficiency, time saving, error rates are down. And as a bookkeeper, you see your clients elevating, they're elevating their interest in their own business, and from our point of view as bookkeepers, we that improves the relationship. You'd rather work with half as many A-class clients, and you'll end up doing more rewarding work. They'll be happier. They're happy to pay. Those people are normally happy to pay more for more. And if you can give them more and give them quality, they're the ones that you want to nurture. So I think good financial controls are a winning perspective. The really micro, some of them may not want to go there. You can still implement some really basic separation tasks in there. As soon as you've got an employee, and as the numbers grow, they become more and more important. But there's still a lot that can be achieved even in a very small team. So yeah, important issue.
Yeah.
And
There's also an insurance consideration too, Pete.
sorry.
We've been asked questions about financial controls by our insurer for our business. So management insurance and those sorts of things. That's going to minimize costs to businesses by having those controls and being able to define them in place from an insurance perspective, and risk mitigation. So it's
Yeah,
not just
100%.
the business. So yeah.
The impact on a tax audit is pronounced too. I've sat through, I won't say lots of them because that would imply I'd act for dodgy people, but they come around by routine, and the first meeting they're trying to ascertain whether there's controls in place in this business, because what that does is that scales their work product, and they say, okay, well, I can see that the systems here are slack. I'm going to spend more time and look at more transactions and take longer. If they know that there's a good system in place and there are controls and checks and balances, they will curtail their audit activity dramatically because they know that more often than not, this thing's going to get the right answer. So yeah, it's a winner. Well, it's a winner all around. Anyway, any more questions? I think we've pretty well got it here.
I do like Jenny's comment. Client ignorance is the most frustrating. So yeah, we can be educators in that regard, and that document that's on the screen at the moment, give it to your clients.
Yeah, sure.
There was a question about non-for-profit, so I'll just say that there is a 20 on top of our plans. There is a 20% discount for non-for-profit entities for ApprovalMax.
Yep. All right. Well, thanks everyone for joining us. Thanks team. Thanks ApprovalMax. We'll see you next time.
See you later.
Thank you.
Bye.